Welcome, financial professionals. I'm Shane Van Patten, Regional Vice President here at E4 Insurance Services, welcoming you to the Brew, building relationships every week. Thank you for tuning in. For those of you joining the Brew for the first time, welcome. We like to start the Brewcast by celebrating today's national days. The first one is today is World Tsunami Awareness Day, and the second one is National Stress Awareness Day. Greg, before you jump in, we'll talk about this in a little bit because these are both incredible days that we're having on the conversation that we're having today. But so hold off. But today we're kicking off November's lineup, which is Long-Term Care Awareness Month. I'm joined by Greg Mantz, Regional Sales Director at OneAmerica, to discuss the aging population demographic in the United States and to properly warn everyone that the silver tsunami siren is blaring. We encourage you to use the chat box or raise your hand to ask questions. All attendees are entered into a drawing for a CE voucher and a Starbucks gift card, and we'll announce the winner at the end. With that, thank you, Greg, for joining us today. How you doing?
Doing great. Thanks for having me, Shane.
Well, it's great to see you. A lot of people on the call probably don't know that we know each other pretty well.
Yeah.
We actually played high school football against each other, so I have 3 questions prepared for you, and I'm going to start from easier to a little bit harder, if that's fair. So the first one is we both grew up in North Dakota, right, close to each other. You grew up in Mandan, North Dakota. I grew up in Bismarck, North Dakota. What separated our cities?
That would be the Missouri River.
All right. We both now live in Minnesota with our families, right? You live in Minneapolis. My family lives in St. Paul. What separates us?
River.
So my question is, why do you have a moat and a river set up against me and my family?
That's a great question. Not personal, I promise.
All right. I just wanted to see if there was anything personal or something we could work out.
What the audience doesn't know is there's a joke about Mandan and Bismarck in the river, and I think just about every presentation I've done with Shane over the last 5-6 years, he's always opened with that one. So I appreciate you from refraining on that, Shane.
And I promised that on this presentation I wasn't going to do that. So that was question 1. I just wanted everybody to know that you've built a river between me and my family, no matter where we've lived. Question number 2, how incredible are today's awareness days?
It's
World Tsunami Awareness.
Almost like we planned it.
Almost like we planned it, but we didn't. That's
right.
That's the honest truth. We did not plan having this conversation. We'll get more into that tsunami warning, especially the silver tsunami warning. But the third question that I have for you, and I know you've heard me talk about this before, but I'm just going to bring it up because I want to make sure I say it right. How long have you been in the industry, first of all? I mean, you got to be close to me. I'm 20 years. You got to be
just about 20, somewhere around there.
About 20. Yeah, I figured it was really, really close. Of those 20 years, right, I want you to think of like no matter what job you were in, how many industry presentations that you've attended, and how many times have you heard somebody say, guess how many baby boomers are turning age 65 every day? How many times does that question come up?
It feels like millions. And I ask that question to audiences all the time when I do my presentations.
Yeah, I love somebody answered in too many. That's the absolute truth. But why do they bring it up? And let's talk about that first. Why it brings it up is, and the answer was usually 10,000, right? It was 10,000 people were turning 65 every single day. And that became important because a lot of financial advisors said, hey, these are people that are retirees or near retirees. They've accumulated a lot of wealth. They've gotten up the mountain, and now we can really help them get down the mountain.
Right.
But what's really interesting, and you and I had a conversation about this, I think it was earlier this year, but we started identifying that the first baby boomers are going to be turning age 80 next year in 2026.
Yep.
What's the significance of that?
Yeah, so we think about the baby boomers, and I think it's 11,000 a day. I think right now is the current number that I've heard. But that's just the kind of the back end of the baby boomers, right? The front end or the vanguard of the baby boomers are turning 80. It's the largest generation in history. And the significance is that when you look at like actual long-term care claims, so at OneAmerica, we publish a piece that has our claims history on it. It's got some really fascinating and enlightening statistics about our actual claims. And one of those is the age at which people start to need long-term care. And when we look at all of our historical claims of having done this for 35, 38 years, we see that age 80 is where the claims really start to take off. It's something like 75% of our claims happen after age 80. And so we've got this tsunami, this wave coming, where we've got this largest generation in history that's knocking on the door of 80, which means that they're knocking on the door of starting to really have a significant impact on the amount of care that we're providing as a country.
Sure. So if anybody needs clarity of what the silver tsunami is, right? We're using the silver for the silver hair, the older generation population. We have this large group coming through, nearing that age 80, starting next year in huge numbers. That happens to be the same age of average age of somebody needing, help, right? A long-term care event, things of that nature, and what this effect does. So some of the things that I think about is, one, do we have enough resources to care for these people, right? We have home health care, adult daycare, assisted living, nursing home. I've been through it with both of my parents, and it is a very difficult road to find just places that are open. So if we already have, if it's already difficult to find resources for this, and now we have this significant large population. Again, this silver tsunami is coming. You and I have talked about behind that tsunami is a hurricane. And that hurricane could be anywhere from a category 1 to a category 5, and it depends on how well you plan, how well you communicate with your family. But again, are we going to run into a resource issue? Are costs of care going to significantly go up? Because again, when you have high demand, low supply, I mean, it's just math.
Supply and demand problem, right? I always kind of like to paint this picture. So I've got a slide I like to use a lot, and it talks about the amount of money we're spending as a country on care. And if we go back to like the early 2000s, we were spending about $30 billion as a country on long-term care. So if you think about the early 2000s, the baby boomers are in their 50s, maybe they're getting into their 60s. By 2015 or 2011, the first baby boomer turned 65. By 2015, we were spending $225 billion. So we went from $30 billion to $225 billion in that 15-year span, or whatever, roughly 15-year span. We fast forward that to 2021, and then we were spending roughly $500 billion. And with that first baby boomer turning 80 very soon, those numbers are just going to continue to increase. One of the things I talk about a lot is, the government's aware that this is coming. There's been preparations put in place, things like the Washington CARES Act. Other states have considered that. Minnesota, where we both live, had put out a report called Own Your Own Future, where they talked about this, and they made some projections in that report. And in that report, they expect the long-term care supportive services, Medicaid payments to double in the next 10 years. And so if we're, knocking on the door of $1 trillion now or $750 billion now, and we look at 10 years from now, if Minnesota expects it to double, you kind of take that as a proxy for the rest of the country as well. It's not unreasonable to assume we're going to spend $1.5 trillion or $2 trillion on care costs in the near future.
That's wild. And that doesn't even take into consideration probably the lost opportunity cost of spouses, children, grandchildren that are taking time off of work and physically helping out some of these families, things like that. So
exactly. That's exactly right.
And this is kind of it is scary, right? You got this silver tsunami that's coming. We know behind it's a category or a hurricane, either it could be category 1 to category 5. Let's look at some of these boomers that are maybe 70 and older, right? Traditionally, right, as an industry, we may have failed them, not the people on this call, but as a whole, a lot of these families haven't had a long-term care planning conversation. They don't have plans. They might be perceived that they're already comfortable in the seat in retirement, right? Their income supporting their lifestyle. They don't really have a lot of discretionary stuff going on. They're older, so their health may have changed. Let's, again, this is just off the top of my head, but let's create just a quick list of what advisors could do for some of these older baby boomer clients that are beyond the typical age, maybe health of looking at long-term care insurance. I mean, what, as financial professionals, what can we still be doing for those clients? So let's create that list.
Yeah, and where's the most important part to start, Shane? It's with the questionnaire that you talk about all the time, right?
Creating a plan. I mean,
creating a plan.
Doesn't cost nothing, right? To determine, hey, where do you want to receive care? Preferably, if you ever need care, where would you want to receive it? Who do you want to have physically provide it? Who do you want to have coordinate it? And then we got to get into that tough decision. How are we going to pay for it, right? Can we do private pay? Can we qualify for insurance? Can we do a combination of both? Is Medicaid a viable solution for our family based on our assets and scenario? So I'm with you. I love that answer. So we start with a plan. Again, where do you want to receive care? Who do you want to have physically provide it? Who do you want to have coordinate it? And how are we going to fund it? I look at, as we kind of go through that, I think every financial professional, again, this is my opinion, should really be reaching out to a lot of elder law attorneys right now, because if they haven't had any planning, if they haven't had any conversations, the default plan right now is going to be a spouse is going to physically try to help out as long as they physically can do it. And most of the times they become chronically ill themselves. Once that happens, the children, no matter where they live in the United States, maybe even outside of the United States, if they love their parents, they're going to pause their own family, their work life, their social life, and they are going to come and travel to wherever mom and dad needs help, and they're going to provide care as long as they can until it's too much of a disruption and they can't do it. At that point, they give up all of their lifestyle, their retirement portfolio, everything gets affected, and they hire out care. I call that a category 5 event.
Well, yeah, and I would agree with you. I mean, it's not insurance focused, but that might be one of the most impactful things you can do in advisors, develop that relationship with elder care attorneys. Because a lot of times, unfortunately, when people need care, they're at that point, they haven't done any planning. There's not much we can really do for them on the insurance side at that point. They're already in crisis mode, essentially. And that's the one thing they can really do to help with the family at that point in time.
So I'm going to set up a softball here for you.
Sure.
So looking at this age 70 to 80, maybe even older, so beyond the baby boom generation. But again, their health has changed. They're concerned about long-term care planning now. They know they should have done the planning 15 years ago. They didn't. They're seeing their friends' health changes. Now they're concerned about it. There's not a lot of products available, but there are some products available.
That's right. Yeah. So we have some solutions that will go up to age 87 even. It really depends on how much leverage we're giving the clients for long-term care with their money. Of course, that's dependent upon their health as well. But we do have at least some basic options that can be really good and viable options for people, again, all the way up to age 87, possibly people that aren't in the best health. So as long as someone isn't already needing care, or they're not quite at that stage, they might be knocking on the door of it, but they're not there yet, we have an option for those people. For people that are younger, maybe 85 or younger, a little bit healthier as well, that can get through the medical underwriting, we've got long-term care annuities, and those tend to be pretty good options for those people. We put a lump sum in, we get some leverage on our money. We get a monthly benefit that might last for 2 times to 3 times to 4 times their money. So that could be a really effective option for people as well. Right. And then I would also just mention, whether those clients that are needing care, whether they have a plan or not, their kids are going to see the impacts of care on them and their families and their lives. And so their kids are in their 50s or maybe their early 60s. I really believe that's the other big opportunity is as we start to see more and more people need care, their kids are going to come to you guys and they're going to say, oh, S, we need to do something about this. We need to fix this problem so that it doesn't happen to us.
I 100% agree with that. Again, just to summarize here, again, if we're dealing with the 70 plus generation, we still need to have a conversation. We still need to have a plan. As financial professionals, if crisis mode happens for them, their health changes significantly overnight, we have to have an elder law attorney that we can refer them to, right? Hopefully that elder law attorney can help protect as much income for the healthy spouse as possible while still letting the other individual qualify for Medicaid or Medi-Cal if you're in California. But if they do have some assets, right? If you got any clients that have low yield holding non-qualified cash, or if they have an old existing non-qualified annuity, low basis, high gains, at least give us at E4 Insurance Services a call, and we can see if that's an asset that we can reposition or repurpose to help pay for care.
Yep.
But what I want to go into next, Greg, is what you just said. It's the again, for some of these older boomers, we can't help them, not with insurance. Again, we can still help them create a plan. We can still help them with elder law attorneys. But if they have a bad experience, if those boomers, we don't talk to them and they have a bad experience, it's the eyes of their children, their grandchildren, what they see. And again, I've been doing this 20 years since my parents both had long-term care in their 60s. I've wanted to help everybody with this type of planning. But I truly think they have a front row seat of a lot of bad experiences.
Mm-hmm.
And I've dealt with a lot of clients. And the first question that I ask them is, do you have any personal experience with long-term care?
I do the same thing.
They'll usually tell me their experience. And at the end, I say, was it a good experience or a bad experience? And they'll usually 9 out of 10 times it was a bad experience.
Yeah.
The follow-up question, and hopefully everybody writes this down with anybody who has personal experience is, and Greg, let's just role play here. You've had a bad experience, we'll say.
Yep.
I'd be asking you, Greg, how do you want your plan to be any different?
Yeah.
And I'm telling you, the things I hear is I don't want to be in the nursing home that my dad was in. Right. I don't want my mother to physically care for me like my mother did for my father. Yep. I want my wife to continue to have a lifestyle unlike my mother, who gave up everything to outsource and have somebody else come and care. In 5 minutes of listening to somebody, asking that follow-up question, I know that they probably want to build a plan that keeps them safe in the comfort of their own home. They want to make sure that they protect their spouse, maybe even children physically, right? Let them supervise or manage care, not roll up their sleeves and physically provide it. And they want to be able to maintain lifestyle for the family. Like, that's what I hear. And it's that younger people that we can significantly help.
Yeah. I advisors always ask me, and I meet with a lot of advisors, and they always ask me, who's the ideal client to talk to about long-term care? And I always tell them, look, at OneAmerica specifically, we've got a lot of options depending on what assets your clients have. We can use IRA dollars, like you said, non-qualified annuities, et cetera, et cetera. So we can meet your clients wherever they're at. So it's not the assets that your clients have. It's not the income that determines who the perfect client is. I always tell people it's clients that have an experience. People that have gone through this are much more likely to do something, to implement a strategy than those that haven't. And I also think it's kind of interesting because the advisors that I work with, the ones that do a lot of long-term care business, they tend to be older clients or older advisors rather. Well, why do you suppose that is? Well, it's because they've been doing this for 20, 30 years, and they've seen the impact of it on families. They've seen the impact of it on finances, on their business. And so they realize how important it is to have this oftentimes difficult conversation with people. So experience leads the way as far as these conversations go.
Absolutely. And again, so just to recap a little bit, and here we'll get close to wrapping up here, but we have this silver tsunami coming, right? This large generation of people that are going to start cycling through age 80, which is the average age of a long-term care event. Unfortunately, a lot of them have no plans. They haven't had conversations. It's going to be default plan. It's going to be sudden. It's going to be a crisis. Behind that silver tsunami is a hurricane that's going to turn into a Category 5 hurricane real quick. It's going to hit the spouse. It's going to hit the children. It's going to hit the financial portfolio. Right? It might even hit. I mean, it's a devastating thing. It happened to my family.
All encompassing.
We have the opportunity to create a plan, have conversations, provide resources, not only help the older baby boomer generation, but start getting into that planning with their children, maybe even grandchildren. Start getting those plans into place, funding strategies, whether it's savings, insurance, investments, combination of all of them, doesn't matter. The idea is, the takeaway, I guess, is if anybody in your family has a long-term care event, it's still going to be a hurricane.
Right.
But with the proper planning, the proper conversations, we can make it a Category 1 hurricane. That's maintainable. We can survive that. We can move on from that. So that's kind of the summary takeaway. Anything that you would add to that, Mr. Greg?
No, I think the most important thing is what you said. It's that question when you meet with your client. What is your experience with long-term care? You ask that question and people will tell you every single time, and you'll be able to identify right away.
Absolutely.
Well, what's important to them. So that is really the key. It's asking the right questions. Another follow-up question I like to use a lot is, if you were to need care, who would provide that care for you? And 9 times out of 10, they really hadn't thought about it. They'll say their spouse. And you say, okay, have you guys had that discussion? Have you thought about what that actually looks like? And again, 99% of the time, they've not gone that far with it. So just by getting the conversation started, you're gonna encourage much better outcomes for your clients.
Absolutely. I'm just looking here to see if there's any questions that anybody's asked. Jesse, if you're on, is there any questions, or should I open it up for questions? I'm looking in here. I don't see any questions. So, all right. As we wrap up, I'd like to remind everybody that today's brew and our entire library are recorded and shared on the brew page on our website at www.e4.insurance. Don't forget to subscribe to our YouTube channel to keep up with all brewcasts. They are released every Wednesday. Now for our giveaway. Greg, pick a number between 1 and 41.
I'm going to go with my old baseball number, so I'm going to say 18.
18.
Yes, sir.
Oh, hold on here. I'm just looking to see who won. I see somebody's got a question. Waiting to see who number 18 is here, but in the meantime, we got a question here. Can you share the solution for people almost needing care?
Sure, absolutely, yeah. So when I say people almost needing care, we have an option whenever you buy an asset-based policy, whether it's with OneAmerica or another company. It typically works the same way. You buy a base contract, and then you buy a rider. So that could be either a base life insurance policy or a base annuity, and then you buy a rider. And that rider extends the coverage past the additional asset itself. Where most of the underwriting comes in is on the rider, because we're giving all this additional leverage for long-term care. So what we have done a lot of, and it's a significant part of our business at OneAmerica, is we sell the annuity oftentimes without even adding the rider. And so a client can take an existing non-qualified annuity that they have, they can exchange it into another non-qualified annuity, a long-term care annuity with us. And by having it in the long-term care annuity, they have a very special tax advantage. The Pension Protection Act says that if you have the right type of long-term care annuity, you can access that money without paying any tax. So this existing annuity you have right now, it might have 100,000 of basis and 400,000 of total value, 300,000 a gain. If you put it over here and you use it for long-term care, you can get to that and use the entire thing without paying any tax. You can essentially erase the gains on it.
So you don't get the leverage, but you get to take all the gains and have them come out as tax-free for pay for long-term care expenses.
Exactly. So it's really self-insuring. It's just doing it in a more tax-efficient way. And if you do that, because we're not adding this second piece, we're not adding this rider, we actually don't really have any underwriting. We ask the client 4 questions. And if they can say no to the 4 questions, we will instantly approve it. And the 4 questions are very basic. One is, are you needing care right now? The second one is, do you use a walker, wheelchair, or similar device? Do you have HIV? And do you have or have been diagnosed with Alzheimer's, Parkinson's, memory loss, etc.? And so if the answer is no to those 4 questions, they're eligible for this product, and they're eligible for it all the way up to age 87.
Age 87. So especially for those 4 questions, if you're looking age 80 to 87, client who has an existing non-qualified annuity, low basis, high gains. Again, based on my personal experience, people love tax-deferred growth in their non-qualified annuity. At some point along the way, they want to access money, and then all of a sudden they become LIFO, last in, first out taxation experts, and they understand it, and they say, you know what, I'm not going to take it from there, I'll take it from somewhere else. Well, what are you going to do with this asset? What are you going to do with this asset now? What a great asset that, hey, we can't get the leverage, but we can turn all those gains into a tax-free benefit.
Right. That's right.
long-term
And then
care.
and then we also give the support on the back end at the home office with our care concierge benefit when it comes to filing a claim. So that just tends to make the process a lot easier for people. And of course, we're giving them this tax advantaged money as well.
Oh, that's fantastic. A couple more questions here. And before I jump into that, Tom Walsh was your number 18. So congratulations.
Hey.
I know Tom personally. He's going to love the Starbucks gift card. So thanks for being on, Tom. Other question. It's really not in the form of a question, Josh, here, but it says, you advise to pre-screen all or most clients prior to submission, question mark. I think he means, do you advise to medically pre-screen all or most clients prior to submission? I know my answer, but I'd like to hear yours, Greg.
Yeah, I think it's a great idea. I mean, you know, we unfortunately, when you're in the long-term care business, declines are part of the deal. You know, it's just going to happen. So I think it's kind of the old adage of garbage in, garbage out, right? The more work we do on the front end to make sure that our clients are healthy and that we can secure an offer, the better outcome we're going to have for everybody. That not just for everyone writing business, but for the client satisfaction, their time, etc. So I always advise that you do. I mean, if you've got clients that are in their 50s and there's truly nothing wrong with them, then I really wouldn't worry about it. But as your clients start to age, yeah, it makes a big difference. Additionally, I would also say that, you know, having that we have the life insurance and the annuities have kind of a lesser standard to get approved with the rider. So a lot of times health will dictate which direction we go, as well as the assets that they have. If we know that they're not in the best of health, we know our chance of success is much higher with the annuity. So that helps us make that determination as well.
That's fantastic. And then the last question here, do you have a one-pager to help start the conversation for advisors with their clients? I mean, I know OneAmerica, you have all sorts of resources. At E4 Insurance Services, we have all sorts of resources. Yeah. I'd say reach out to us, reach out to your RVP. My favorite tool, I have a version of it. I know Greg, OneAmerica has a version of it. We have what's called a Creating a Plan of Care worksheet. It starts off with questions like, you know, do you have any personal experience of being a caregiver or having someone close to you being a caregiver? Kind of that point. What was your experience? How do you want your plan to be different? It's such a natural way to get into that conversation. If you don't have people that have experience, the next question is, do you believe you could live into your 80s, 90s, or 100? Because for the most part, this type of issue is a longevity issue for a lot of people. So outside of chronic illness or accident, it's the frailty of aging, right? The loss of muscle mass, mobility, agility, balance. I don't care how healthy you are. I don't know a lot of 85-year-olds that don't need a little bit of standby assistance just to get through the day with certain activities of living. So, but it's really truly it's kind of an entry point into the conversation. It asks all the really good questions: how you want your plan to be, how do you want to fund your plan,
where do you want to receive care, right?
Who do you want to have for? Where do you want to receive it? Who do you want to have physically provided? Who do you want to have coordinated? How are you going to fund it? Is it going to be private pay? Is it going to be insurance? What other planning have you done? Right? You got a power of attorney, healthcare directive, living will. Have you done any trust? I mean, you just capture a lot. For me, I call it, I draw the line in the sand, so I can meet the clients where they're at, right, and get an idea of okay, here's where we're going to start the conversation. So again, we have an enormous amount of resources. Reach out to E4, reach out to your RVP, reach out to OneAmerica. I know they have a lot of resources as well. So. I'm just looking. I don't see that we have any other questions here. We got Tom Walsh as the big winner. So we'll transition into next week. The brew will be released at 10 a.m. Central. I'm going to be joined by LTC thought leaders Bill Comfort. He's a national LTC specialist and LTC trainer for the CLTC. And Kelly Augsburger, who's a long-term care insurance specialist and certified senior advisor. Don't miss it. We're going to be having a great conversation about how the CLTC designation has significantly enhanced our careers and opened up new opportunities. So thanks, everyone, and we'll see you next week on The Brew.